Hi, this is Joe Rabil with Invest Like a Pro. Want to talk about the differences between day trading versus position trading. And in this video, I'm going to use position trading just means anything that's longer than a hold of a couple days. So anything that I would consider to be, intermediate term to longer term type investing. The thing is that day trading has a lot of benefits to it. I personally think it really kind of depends on your personality. So it also depends on what you do for a living, because if you think you're just going to quit your day job and start day trading and make money right away, I think you're going to find it's going to be a really difficult proposition if you don't have any prior experience. Let me just go through this segment and just see if it makes sense to you. The differences between the two and which one seems to benefit you the most. So here's a trade. I've got a 10-minute on the left and a 2-minute on the right of Alcoa. You can see the circled areas are basically the entry points on two intraday trades. And then I can go and look at a longer term pattern, very similar situation with strong ADX and zero line reversals on the MACD. And I'm getting the two circled areas show two longer term trades. Let me just go back. I mean, if you look at the two, they're very, very similar. I mean, the difference is that one side, the intraday trades are done intraday and completely, finished by the time the day is over. In these, you're holding, for several months. So, the thing is that when it comes to day trading, there is a huge benefit in the fact that there's less risk per trade. And what I mean by that is if you're looking at a 10-minute and a 2-minute chart, the size of those bars are a lot smaller than a weekly chart or a monthly chart, a weekly chart, a daily chart. The significance of that means that if I'm going to put a stop in place, a lot of times I'm only risking 10 cents, 20 cents, something like that on an intraday trade. Whereas on a longer term trade, you've got to risk $1, $2, sometimes up to $5, depending on the price of the stock. So you're able to control the risk by putting on, a smaller risk per trade in terms of your distance to your stop. That allows you to actually buy a lot more shares if you want to, because you're trying to keep the risk down overall on the trade relative to your equity. So if you only risk 20 cents, it's a lot different than risking $2. So the other thing that I think, there's a benefit to day trading is that it's a lot easier to control the downside because of the overnight risk. So if you don't have to hold something overnight, the way the market gaps up and down all the time, it's very, very difficult to control overnight risk. I mean, we're getting that more and more, especially over the last few years. And on individual stocks, trying to hold through an earnings announcement or something like that, you're just taking massive. It's like going to Vegas. You're really like massive amounts of risk. So you got to be very careful there. The thing is that one of the biggest benefits to day trading in my view is that it truly improves your skill set as a trader or investor in a very, very short period of time. This is really what I've used this for. I've done thousands of intraday trades, at least a long time ago I did. And what it did was it just really improved my skills at reading the charts and seeing the patterns, because you have to do it in such a fast pace. You're put on and you're doing a lot of trades, a significant amount of trades. The more trades you do, the better you get. So I think that is a huge benefit to that. And then also the compounding effect. If you're able to be successful as a day trader, the fact that you're able to use a much greater amount of equity, because you can use a lot more of your 4 times your daily equity on an intraday basis, versus if you're going to hold something overnight, you can only hold up to 2 times. So you have the ability to put a lot of money to work, and at the same time, you'd be starting over each day in a way that's creating its own compounding effect. So just by having a successful day or a successful week, you can compound the money very, very quickly. So that is definitely a big benefit. Some of the negatives to downside of day trading to me is that if you have a job, I mean, you're not going to have a job for very long if you're doing this because you have to be in front of your computer and watching the trades. You can't put a trade on and then leave. I mean, I guess every now and again you could do that under the right circumstances or the type of trade, but for the most part, you have to sit there and watch every tick. And especially with the type of movements we've been getting intraday, to have if you're going to have any success, I think you have to be in front of your computer. And the problem with that is depending on your psychology. And, I know for me, if I'm sitting in front of the charts and I tend to want to put a trade on, and it can be very dangerous on an intraday basis if you're looking at charts and you see something that looks compelling, or maybe you're kind of making yourself think that it's compelling, and you start doing a little bit too many trades. I think that's the biggest thing. If you want to be successful, you have to be very, very patient if you want to be an intraday trader. The other thing about day trading that I don't think people realize is that you really got to have good reflexes and execution skills. You got to be either good with a keyboard, preferably a keyboard if you're going to day trade, or you got to be very good with the mouse, and you got to be able to get in and out very, very quickly and know how to do it. And you're going to make mistakes doing this. That's why I say the more trades you do, you're better you're going to get at it. I think this kind of goes back to the easy to overtrade. I think it's very hard to control your emotions. When you're having a bad day, if you've had a couple losses, it's hard to just shut the computer off and go do something else. You kind of want to, stay in there and keep fighting. Most people that want to day trade have a certain type of mentality, and it's not the type that just gives up easily. And I think it can be very, very difficult to be successful. I remember early on when I was doing day trades, I would have a couple weeks, 3 weeks where I would do very, very well. And then I would give it all back in 2 days just because I couldn't just turn the computer off or walk away and say, you know what, today's not the day. And if you think about it, I think day trading is a lot like being a quarterback in the NFL. If you notice, when these guys talk about, and they're interviewed and they talk about how they started to have some success, they say that the game is slowing down for them. And they spend a lot of time in front of the film, looking at film and studying it. And it's really just a matter of taking snaps. And the more snaps they take, the game starts to slow down. And I can tell you from trading that one of the toughest parts of day trading is that it happens in real time so quickly. After the fact, you're like, oh, I could have seen that, or I should have seen this, or whatever. But you have to be able to do it as it's rolling in a very, very fast fashion. And that can be difficult to do. It just takes a lot of time. And the other thing I'll say is that on an intraday basis, the day trading, I think the reason why it's so difficult is because you're going to be subject to a lot more random movements intraday. There's a lot of, a tweet comes out and the market just moves randomly. And if that's going to be the case, then you have to look at it this way. You have to accept the fact that your win rate is probably going to be lower on an intraday basis. It just, I at least I've found from my own trading that I can have a much higher success rate if I do the position type trades where I'm in and out, because I'm not subject to these short-term market fluctuations that are very, very random. So the other thing I think is a huge downside to day trading is that a lot of times you'll end up missing the forest through the trees. And what I mean by that is if you step back and look at some of the stocks that you're trading and you realize what a powerful trend it's in, that if you just sort of stood back and said, you know what, I'm going to let this trend for the next month, 2 months, 3 months, you could have ended up making a lot more money. A lot of that has to do with the type of market environment you're in. If you're in a very strong trending environment that doesn't have a lot of volatility, you're much better off position trading. If the volatility is huge and you're getting massive fluctuations on a daily basis, intraday basis, where the stocks are moving up and down and all over the place, then you're probably going to be better off day trading. Most people don't have the choice to switch back and forth. And I don't think most people have the aptitude to do both. I think you have to figure out for yourself which is right for you. If you're going to try to day trade, my suggestion is go out there and find a mentor. My suggestion would be someone like Oliver Velez. I think he has a pretty good program. The Dr. Dan runs his chat room. I think he's very, very good. But the thing I would suggest more than anything is to literally do like 1,000 trades on paper. Ninja Trader allows you the ability to do a lot of paper trading. In fact, so does the program through Velez. But the point is this: don't put your hard-earned money to work, for real, until you can prove that you can make money on paper. If you can't make money on paper, you are not going to make money with real money. Then once you've done that, then go to really small trades. Don't start with a huge amount of money and try and make, most people are doing this because they think they're going to get rich overnight. The odds are really, really small that you're going to step in and make a lot of money day trading right away. You're going to have to accept the fact that it's going to take you and just like any business, it's going to take you a couple years to get up and running. And you have to take it with that mentality. The most important thing I'll suggest to you is that you need to record your trades in detail to know what the methodology you're using, what type of entry pattern you're using, what is your trigger. All of that needs to be put in on paper. Otherwise, you're sort of wasting your time, because if you go 3 months and you put up a bunch of trades and you don't have a lot of success, you've gotten nowhere. But if you've tried a specific pattern that you've done over and over again for 3 months, and you have a set of trades that tell you how you've done, you could probably alter that and actually start to make some real progress after 6 months. But again, if you're just randomly taking trades and hoping that you're just going to get better at it, I think you're going to have a really long road. The reason why I don't day trade, I just don't. To me, now I've gotten a little older. The fact of the matter is, it's just, to me, it's not as appealing as it used to be. It sounds, and I mentioned this in my book, Invest Like a Pro. It really sounds so glamorous. Hey, I'm going to trade for 2 to 3 hours today. I'm going to make a lot of money, and then I'm going to go play golf. The reality of the situation is it's very daunting, because most day traders go through periods where they struggle a little bit. And I think that's why there is a proliferation of so many day trading gurus out there that want to teach you how to trade. It helps to provide them consistency with their day trading income. Their day trading income probably isn't going to be as consistent as everyone might make you believe. Now, I'm not saying these guys aren't good. I know they're good. And I've seen Dr. Dan make money day in and day out. So I'm not saying that these guys don't make money. I'm just saying, from a mental standpoint, it's very, very hard to stay on 250 days a year and think that you're going to be consistent month in, month out. I think it's just and it becomes a big grind, especially at the beginning. I personally would rather put my money at work for me, rather than me sitting there working, from 9:30 in the morning until 4 in the afternoon, having to work to make, watch every tick and all that. I'd rather put really good trades on and let my money do that. And then, at the end of the day or end of the week, I could take a look and see what the stocks look like. You literally could take 10 to 15 minutes every day using a good strategy, and then on the weekend, probably take a little bit more time, maybe an hour, hour and a half. And I think you could have a very good strategy in place where you could compound your money. The other thing is that if you have a job, you really can't day trade. Anyone who tells you that you can have a job and day trade at the same time is totally kidding you. They're lying. You can't do it. It is a full-time job, and it's probably one of the hardest full-time jobs there is. I think it's one of the hardest skill sets, other than playing a professional sport or something like that. If you want to try and be a PGA golfer, yeah, I guess that would be comparable to trying to day trade successfully. I think you can also compound your money pretty successfully with a lot less stress. And I'll just give you a few examples. You can take compounding $25,000, because you have to have $25,000 to day trade. And if I did that at 15% for over 20 years, this is what the equity line would look like over time. You'd take a $25,000 and turn it into 409. If you can make 20% on your money over 20 years, you take 25,000 and it becomes almost $1 million. Now, that's not adding one extra penny into the equation. That is just starting with 25,000 and letting it grow. If we were to actually add $200 a month to that, then the numbers start to get a little bit more significant over a 20-year period, to the point where you don't have to worry about, retirement money and all that. And I think even if you want to day trade, I think you want there's a few things that you're going to want to do. I don't have a problem doing some intraday trading, especially if you have the ability to maybe practice on when the market's not trading. There are programs out there that'll let you kind of go through and look at trades, or watch bar by bar as the market's going, as if it's real, sort of in a simulation mode. And you can put trades on, and I think that'll really improve your skills. If you're gonna try and do any trades, real trades on an intraday basis, just make sure you start with small amounts of money, so that you have money left when it's all said and done, because it is going to take you a long time to learn. And then lastly, my big suggestion is, even if you want to do some of the day trading, make sure you create a plan for yourself to do a longer term strategy. Because if 5 years goes by and all you've done is the day trading stuff, you're going to look back and say, you know what, if I would have put this money in the market at 15% a year, I'd actually have a decent sum of money here. So, don't make that mistake. Have the longer term strategy in place as well, because you want to build wealth. The fact of the matter is, day trading is typically considered income. You're using that for income because you have to, because that's your job. But that doesn't mean that you can't have a longer term strategy in place to build wealth. And the only way you're going to be successful with that is if you have a written plan in place. So anyway, I hope this was helpful. If you have any questions or comments to make, please post them below. Please hit the subscribe button, and make sure you hit the bell to get notifications. Okay. Talk to you soon.